Good morning, everyone. We are in our last week's session. Today's Friday, 17th of August 2012, end of the week, and ahead of a well-deserved weekend, I would say, with some more positive sentiment being re-established in the markets as yesterday's quite weak U.S. data and the comments from the big boss Angela Merkel yesterday in Canada, boosting the single currency and actually pushing it up from the dangerous 122.50 zone, that the levels that single currency touched yesterday, surging above 123 as our initial barrier, and approaching the upper boundaries of the past couple of days range that has been established between approximately 123.80 and 122.50 on the downside. Not much to be expected unless we see the clear break above 124, but some positive signals that came yesterday, as said, turned the sentiment more positive and optimistic. The Angela Merkel voiced support for ECB President Mario Draghi. Mario Draghi's crisis fighting strategy yesterday, and basically pressed her European partners to move swiftly towards a closer integration of fiscal policies, saying time was running short. The recall of our previous sessions and comments that I was highlighting most of the time, that there is no so far there is no united action, as the main failure actually on setting up the European Union years ago was the failure to make the fiscal union, where each country basically became financially and fiscally independent, and basically this led the European Union to the crisis, as there was no the central control of the things, and most of the countries, especially the southern ones, went into the heavy debt crisis due to their heavy loans. This is a good sample of Greece, now Spain, as well as Italy, that has around 1,900 billion euros loan. So this is putting a big pressure on the current situation in the European Union. We hope that European leaders will finally find a good solution. The problem is that Union is still split on, I would say, two blocks, with Germany pushing for the more workable solution that will basically make a loss of some independence of the countries. But this, for the time being, this is the only workable solution, and from the other side, alternative scenario doesn't look good at all in case of failure to find a good base and take the proper steps to tackle the crisis in a proper manner and avoid a more disastrous scenario. Likely would be the Greece, as there are heavy talks already about Greece possibly leaving the Eurozone country and monetary union, Eurozone and the monetary union, pardon. That would have quite a big impact on the other currencies, as domino effect will start, and most of the southern Europe countries, most likely in case of such a scenario, would be following Greece. We hope that solution will be found for this. However, some polls made the past few days show that Eurozone will likely slip into recession, and won't grow until 2013. This was the polls of Reuters economists, who also don't expect any new aggressive policy response from the European Central Bank. This is exactly opposite what I just mentioned now. The monthly survey results that were released yesterday follow news that the Eurozone just barely skirted recession in the first half of the year, with only Germany growing in the 3 months to June, and France, the second largest Eurozone economy, flatlining. These were the GDP releases during the past week. We mentioned them in our previous sessions, and taken together with the worsening outlook for the Eurozone's most vulnerable economies, there appears that to expectations for an end to the Euro crisis or any prospects for a meaningful economic rebound, a modest 25 basis point interest rate cut to 0.5% expected from the ECB next month will not be enough to stop the rot, and would be largely symbolic, as the rate is already so close to zero and can do little to stimulate borrowing. From the other side, while President Mario Draghi has promised he will do whatever it takes to save the euro, and the large-scale purchases of short-term Spanish and Italian debt are likely later this year, there is nothing on the horizon that economists see as pointing to vigorous recovery. Again, another quite disappointing and pessimistic outlook for the current situation in the Eurozone. We hope that, as said, we hope that some workable solutions will be found for the Eurozone. Not only Eurozone, but this is now the hot point of the world, with other economies also slowing down, including the US, with yesterday's quite disappointing data of jobs data, the weekly jobless claims, showing that the US economy is still far from any more significant recovery. And also yesterday's data released from China showing that the giant is in the downward trend. The Chinese economy is basically slowing down. So most of the biggest economies in the world are hit by current crisis. And if something good and workable will not be found in next 6 months to 1 year, then we might have quite a big impact on the current and the situation in the whole world economies. From today's calendar, despite the end of the week and the last week of the day, we have a number of events that are due to be released or already released. The German PPI for July has been released. No change, came at 0.0 compared to 0.4 increase forecasted. However, minus 0.4 was the previous release. More significant data come from Eurozone at 8 o'clock GMT. June's current account is expected to show the surplus narrowing to 7.8 billion euros compared to 10.9 billion euros in May, while Eurozone trade balance for June due at 9 o'clock GMT is also forecasted to decrease to 5.4 billion euros compared to 6.3 billion euros in the month of May. America's start at 12:30 with Canadian CPI for July. It's forecasted to increase to 0.3% on a monthly basis compared to minus 0.4% in the release of month of June, while core CPI has the same, exactly the same forecast and the previous release. From United States, 13:55 GMT. Preliminary University of Michigan consumer sentiment. No changes are forecasted for August release, 72.3. With inflation expectations, we have no forecast. 3% was the previous release. And finally, at 1400 GMT, the last release for today, July's leading indicators from US, improvement to 0.2%. Compared to minus 0.3% forecasted for today. And we will move now to our technical part and see the latest movements. The most significant was actually Euro's rally from the dangerous 122.50 support zone when the single currency regained the levels, upper levels of the better shown on the 4-hour chart, short-term range that is limited on the upside by 123.80 and on the downside by 122.40. 50 with the 4-hour studies being in a rather neutral mode for now, with break at either side required to give us near-term direction for the single currency. As said, immediate barrier at 123.70-80 zone. The 123.73 was the yesterday's high, touched again this morning ahead of 123.84 and 123.86. This is the barrier to open way towards 124 and more significant 124.40, double top of 6th and 7th of August 2012. The daily structure still holds a negative tone, although the break above the main bear trend line of 132.82 and yesterday's close above this level sees is seen as more promising as the study started to point higher and see good potential for a break higher. 123.93 is the 55 days moving average ahead of 124.40, our key static barrier, a break of which is required to resume the short-term recovery of 120.42 low of 27th of July 2012. On the downside, 123 acts now as initial support ahead of range floor 122.50-40 zone, and only loss of these levels would further weaken the short-term structure, as this also marks 50% retracement of the rally from 120.42 to 124.41 peak of 6th of August 2012. Bullish crossover of 20 over 55 days exponential moving average is underpinning now the rally from at 123.15 with the quite positive tone seen also on the hourly chart, although some overstretched conditions might be signal of further consolidation, with the 123 zone, I would say, seen as ideal reversal in case of any corrective dips to keep the near-term positive tone established yesterday of 123.54 in play for possible expansion higher. Also, bear in your mind that today is the last day of the week, and covering positions would be the likely scenario towards the end of the day. So we might see some easing in case of a further break higher, as most of investors are covering their positions at the end of the week and not keeping them during the weekend. In this case, most of the traders are long euro, so some easing might be seen based on this, but the main focus remains at 124 and 124.40, with the break here required to improve even the larger picture that still has a number of bearish elements. The British pound remains in the steady uptrend of 154.89, the low of 2nd of August, with yesterday's fresh rally after finding support at 156.30 zone, just above the main bull trend line, extending gains above 157 and briefly breaking above 200 days moving average that currently stands at 157.17. It is significant that yesterday's close was above 200 days moving average. That gives more potential for further extension higher and test of a very important 157.50-70 zone that marks the 2 months range top, break of which is required to break out of the range and establish a fresh direction. The downside remains well supported for now at 157 approximately, where is 20 days moving average ahead of 156.70 zone, 156.60-70 zone, where is the 55 days moving average and the bull trend line, and any reversal above these levels would keep the short-term structure positive for a possible attack at the key barrier at 157.70 zone. On the downside, I would say only loss of 156.30, 156.00. That also marks 50% retracement. That will also trigger the break below the trend line support, would weaken the short-term structure and allow for a deeper reversal, and as well as signal that upper boundaries of the 2 months range will stay out of reach for now. And dollar yen again in the steady rally of its recent base at 78.15, with the yesterday's extension to 79.40 and this morning 79.42, keeping short-term bulls fully in play. Some overextended conditions seen on the hourly chart warn of possible easing, corrective easing, yet no any signals generate clear signals of reversal being generated on the 4-hour chart. Pardon, hourly studies are in the positive territory, but slightly descending as we see the MACD is still pointing lower. See potential of possible a reversal at this point, as 90 days moving average currently keeping the upside limited. Break here that marks our first barrier ahead of 80.00 as the next strong resistance, and psychological barrier is required to open way towards 80.00. On the downside, the broken bull trend line at 78.60 offers good support. Before this, we have 79.00 as around the figure support, and the a previous range top at 78.80 acting as good supports. Ideally, any dips should find support at 79, 78.80 zone to keep the short-term bulls firmly in play, and the possible extension towards 80.00 is seen as our next upside target. And the dollar Swiss, as a part of broader dollar's weakness, remains at the back foot following upside rejection yesterday at, on approach to 98.00, our initial barrier, with the fresh easing now threatening again the 97.00 level as higher base level tested several times, and holding the downside for now. Overnight's corrective action, brief corrective action of 97 zone was capped at 97.30, limited by descending 20 days moving average that already crossed below the 55 days one, with the indicators in the deeply in the negative territory, seeing potential for further weakness and a further extension of short-term downtrend of 99.70 as corrective action of the low at 96.54 seems to be losing traction after a failure to regain 98.00, with the break below 97 required to confirm fresh bears taking control and possibly open way for test of double bottom at 96.55, as 4-hour indicators are now attempting below their midlines and seeing potential for further easing. Daily structure is also the strong uptrend is now running out of steam, as most of indicators are already in the negative territory, with the break below 97 and 96.55 as seen as a break point to open way for further corrective action of the larger uptrend from 89.29 that peaked at 99.70. And quick look at crude oil that again regained the strength after breaking above the recent range, hitting levels above 95.73 seen so far, approaching our barrier at 96.77 mentioned in previous sessions, 200 days moving averages. Current crisis in the Middle East seems to be gaining pace, and the possibility of further escalation of the conflict keeps the oil price well supported. From the other side, the White House is dusting off their old plans for a potential release of oil reserves to dampen rising gasoline prices and basically prevent high energy costs from undermining the success of Iran's sanctions. A source with knowledge of the situation released yesterday, the U.S. officials said they will monitor market conditions over the coming weeks and watching whether gasoline prices fall after the September 3rd Labor Day holiday, as they historically do, as signaling the end of the holiday seasons, and they will take an action. So this is one of the things that might put some pressure on the oil price for now. However, the positive tone that dominates in the current outlook for the oil price sees the more potential towards the upside, as all studies on the lower and the larger time frames keep the upside favored for now, and the previously mentioned targets would be the likely test of previously mentioned targets according to the current technical situation would be the likely short-term scenario. That was all for today. Now you can ask your questions. If there is any question, any analysis that we missed or anything that you would like to know, you can submit your question now. We have a question about gold. We didn't mention it at the beginning. It's the gold again, some ground bouncing above 1600. Important support following yesterday, 2 days ago, dip to 1590 with the levels at 1618 seen so far, just ahead of our initial barrier 1626, 1640 zone, better seen on the daily chart. Actually, this is quite a strong barrier, and basically break above these levels would be a trigger for further extension higher, as the range is currently narrowing, and the pair is the gold price is established between 1590 and the 1628 level. More potential, according to the current technical situation, is seen towards the upside, although the quite extended hourly conditions warn of possible consolidation, yet no any signal showing any reversal for now. But overall picture still keeps the upside slightly favored. However, a break above previously mentioned 1640.20 important barrier is required to resume towards the upside and prevent yellow metal from sliding towards the lower boundaries of the short-term range. Any further questions? Okay, it seems that we are done for today. No more questions. In this case, I would like to thank you all for attending our live sessions. We are back on Monday as a regular beginning of the week at 7 o'clock GMT or 10 o'clock local Cyprus time with the fresh news and analysis. Until then, I wish you a nice and successful trading day today, and also nice and relaxing weekend. Good luck.